The way it comes into play is, let's talk about what's the worst case. Default, right? Foreclosure. That's going to be our worst case in almost any real estate transaction. And so if everything goes belly up and the lender comes back and says, can't make your payments, can't make this investment work, can't make your home work, can't make whatever work, we're going to foreclose on you. They're in the first position. They can come back and they can either take the property back as collateral, right? If it's a collateralized asset. If it's a recourse loan, like in commercial real estate, which I've done videos on this, by the way, you guys, recourse versus non-recourse loans, they can take back the collateral and they can go after the buyer or the note holder and say, you also now owe us money. The collateral is not enough. But what ends up happening is that seller who did that carryback can lose out completely because they're in a second lien position. The lender can essentially come in, and we'll let the lawyers, do their work on this because I'm just a broker, can't get into the legal aspect of this, but there are legal means of going in to be able to essentially push aside the second note. The lender in the first position can what's called foreclose on the second note and almost really make it kind of null and void. So oftentimes what they end up doing is they may come along and say, we need to foreclose on this property, but what we're going to do is we're going to settle with the second lien holders.